Hello traders, welcome to the LFB and our global video charting review. February the 2nd, 2011. This is our review of the global commodity markets. Please note the disclaimer that's posted to the video landing page, and please ensure that you've read through and accepted the disclaimer before moving on. Ahead of a very important week of economic releases, including the US non-farm payroll jobs numbers on Friday, there's bound to be volatility in intraday global equity, commodity, and interest rate trade as markets hold their sideways moves, albeit at yearly highs on equity markets. A very quiet period of trade has been seen in global commodity markets ahead of a raft of red flag releases that are very likely to set the tone for February trade. This is probably the calm before the storm that we're seeing at this point in time. US employment data has dominated global commodity and equity direction on the first Friday of any given month, and this week is likely to be no different at all. If the non-farm payroll numbers report better than expected, it's very likely that gold, silver, and oil prices will move higher to test near-term resistance points. Gold's trading at the neutral swing point around 1335. All of the charts that we see are courtesy of the automated trading program from the LFB trade desk. And as we can see, gold has tracked sideways with some sporadic moves. And these charts look very, very similar to S&P, to the German DAX equity markets as well. Upside targets are going to be around 1350 on gold. Downside support, we know that 1320 is important, and we've also seen that 1310 is a price point where the market is prepared to buy the dip. Silver's trading at the 20-day simple moving average with resistance just above at 29, which is the 50-day simple moving average as well. There's a more bullish undertone to silver than gold at this point in time. However, both do look as though a pullback to test support is going to be far more likely than a new breakout at this point in time. Targets on the downside for silver to be bought at would be around 27.50 and 27.00. If we do get a test down towards the 26.50 area, it has to be made aware that the 100-day simple moving average is sitting down here as a solid area of support. West Texas Intermediate crude oil trade held a test of support at 90.10 in trade on Sunday, and that was a precursor to a move higher that's now held, and crude oil now trades above the 90.50 swing point. We've got the 20-day simple moving average holding as support. We would be looking for crude oil to move higher on a very positive non-farm payroll number from the US on Friday, but wouldn't expect crude to make a breakout without first of all coming back to test the support areas around 89. At this point in time, there are no new signals on gold, silver, or oil trade, but we do expect silver and oil to be a little bit more bullish than the gold markets as the regional social unrest plays out, as well as the economic red flag releases being absorbed during the course of this week. It really can't be underestimated how big this week is in regard to setting the tone and momentum for these global commodity markets over the course of the next month.